Hey everyone, Graham Stephan here, and let's be real, we all love a good scary story. But today we're not talking about ghosts or ghouls. We're diving into the terrifying world of crypto horror stories, real tales of investment mistakes that'll make your hair stand on end. The crypto market, as we know, can be a wild ride. It's full of potential, sure, but it also comes with its fair share of risks. And unfortunately, many eager investors have learned these lessons the hard way. Now, I'm not telling you all this to scare you off. My goal today is to equip you with the knowledge you need to navigate the crypto landscape safely and responsibly. We'll be dissecting some chilling tales of investment gone wrong, analyzing what went wrong, and most importantly, learning how to avoid making the same mistakes. So buckle up, grab your financial security blanket, and get ready to explore the dark side of crypto. Let's make sure your crypto journey is a thriller, not a horror story. Our first horror story takes us into the dark world of scam coins. Imagine this. You're scrolling online and stumble upon a promising new cryptocurrency. It's got a catchy name, a slick website, and promises astronomical returns. Sounds familiar, right? This is where many unsuspecting investors fall prey to the allure of easy money. The promise of getting in early on the next Bitcoin can be incredibly tempting, especially when you see those impressive-looking charts and read testimonials from supposed early adopters. But here's the harsh reality. Many of these coins are nothing more than elaborate scams, designed to part you from your hard-earned money. They often lack any real-world utility, have no solid team behind them, and rely solely on hype and false promises to attract investors. Remember, if it sounds too good to be true, it probably is. Don't let the fear of missing out cloud your judgment. Always do your due diligence before investing in any cryptocurrency, especially those promising unrealistic returns. Now you might be thinking, how can I spot these scam coins? Well, the good news is, there are usually red flags. One of the biggest ones is a lack of transparency. Legitimate projects have nothing to hide and are open about their team, technology, and roadmap. If you're struggling to find detailed information about a project, that's a major red flag. Another warning sign is excessive hype and pressure tactics. Scam coins often rely on creating a sense of urgency, urging you to invest now before it's too late. Don't fall for it. Take your time, do your research, and never let anyone pressure you into making a rushed investment decision. Remember, investing is a marathon, not a sprint. Sadly, in our first story, the investor, blinded by the promise of quick riches, ignored all the red flags. They poured their savings into the scam coin, only to watch in horror as its value plummeted to zero. The website disappeared, the developers vanished, and their investment was gone forever. This story highlights the devastating consequences of falling for scam coins. It's a stark reminder that not everything that glitters in the crypto world is gold. But it doesn't have to be this way. By arming yourself with knowledge, being skeptical, and following some key principles, you can avoid becoming another victim of a crypto horror story. In the next chapter, we'll delve into the crucial importance of thorough research before investing in any cryptocurrency. Stay tuned. Let's face it, diving headfirst into research isn't the most glamorous aspect of the crypto world. It's not as exciting as watching your portfolio skyrocket, but trust me, it's crucial. Think of research as your financial safety net in the crypto sphere. You see, in the world of crypto, knowledge is power. The more you know about a project, the better equipped you are to make informed investment decisions. Remember, we're not just throwing darts at a board here, we're talking about your hard-earned money. So, what does thorough research actually entail? Well, it's about going beyond the hype and digging deep into the fundamentals of a project. We're talking about understanding the team behind the project, the technology powering it, its real-world use cases, and its long-term vision. Don't just rely on what you see on social media or hear from influencers. Dig deeper, read the white paper, explore their website, and understand what the project is truly about. One of the biggest pitfalls in crypto research is getting caught up in the hype. It's easy to get swept away by the excitement surrounding a new project, especially when you see everyone on social media talking about it. But remember, hype is often driven by speculation and emotion, not necessarily by sound fundamentals. Don't let FOMO, fear of missing out, cloud your judgment. Take a step back, analyze the project objectively, and ask yourself some critical questions. Does this project solve a real-world problem? Does it have a strong team with a proven track record? Is the technology sound and innovative? These are the questions that will help you separate the wheat from the chaff. Remember, investing based solely on hype is like building a house on sand. It might look good at first, but it's not going to last. In this chapter's horror story, our investor learned the hard way about the importance of thorough research. They stumbled upon a project that seemed promising on the surface. It had a cool name, a flashy website, and a lot of buzz surrounding it. However, they skipped the crucial step of digging deeper. They didn't bother to research the team, understand the technology, or analyze the project's long-term viability. Blinded by the hype, they invested a significant amount of money. Unfortunately, the project turned out to be a classic pump-and-dump scheme. The price was artificially inflated by a small group of insiders, and once they dumped their holdings, the price crashed, leaving our investor with significant losses. This story underscores the importance of not cutting corners when it comes to research. Remember, in the world of crypto, knowledge is your best defense against making costly mistakes. In the next chapter, we'll explore the dangers of phishing scams and how to protect yourself from falling victim to them. Stay tuned. Let's talk about phishing scams in the crypto world. They prey on your need to react quickly. These scams are incredibly convincing. You get an email that looks like it's from your exchange. It mentions unusual activity on your account. You click the link to secure your account. The website looks identical to your exchange. You enter your login details. But it was all fake. Scammers now have access to your account. They can drain it before you realize. Recovering that money is nearly impossible. Legitimate exchanges never ask for private keys. Emails asking for sensitive info are red flags. So how do you protect yourself from these digital pirates? First off, always double-check the sender's email address. Phishing emails often use addresses that are very similar to the real deal, maybe with a few letters changed or a different domain name. Next, look out for generic greetings like "Dear Valued Customer." Legitimate companies usually personalize their emails, and always be wary of urgent requests or threats. Scammers use these tactics to pressure you into acting without thinking. Remember, if something feels off, it probably is. Don't click on any links or download any attachments until you're 100% sure the email is legitimate. If you have even a sliver of doubt, go directly to the official website by typing the address yourself or using your bookmarks. Look, the crypto space is like the Wild West right now, exciting, full of opportunity, but also full of dangers. And just like in the Wild West, you gotta be prepared. Education is your best weapon against phishing scams. Take the time to learn about different types of scams and how to identify them. There are tons of resources available online, from articles and videos to forums and communities. Remember, knowledge is power, especially in the crypto world. And one last thing, always enable two-factor authentication on your accounts. It adds an extra layer of security, making it much harder for scammers to gain access, even if they have your password. Stay safe out there, folks. Leverage. It's like this tempting siren in the crypto world, promising you massive gains in the blink of an eye. You know, put in a little, make a whole lot. Sounds too good to be true, right? Well, that's because it often is. Now, don't get me wrong, leverage can be a powerful tool when used correctly, but it's a double-edged sword. Imagine this. You're feeling confident, the market's looking good, and you decide to amp up your position with leverage, say 10 times. Suddenly, a little dip turns into a massive loss, wiping out your entire investment and then some. See, leverage magnifies both profits and losses, and in the volatile world of crypto, things can change in a heartbeat. You might be thinking, well, I'll just be careful and time the market perfectly. But let me tell you, even seasoned traders get caught out. The crypto market is notoriously unpredictable, and trying to time it perfectly is like trying to catch lightning in a bottle. It's just not a sustainable strategy. This is why understanding the risks of leverage is absolutely crucial before you even think about touching it. Remember, in the world of leverage, a small mistake can cost you big time. So, before you jump in headfirst, ask yourself, is the potential reward really worth the risk? John, a regular guy, started trading crypto and saw small wins. Then he discovered leverage. He used leverage, saw profits multiply, but then the market turned. His position was liquidated, wiping out his investment and leaving him in debt. John's story is a harsh reminder to approach leverage with extreme caution. Section 3. Protecting yourself. Tips for navigating leverage. Now I know what you're thinking. Graham, you're scaring me off crypto entirely, but hold on, that's not my intention. I want you to be successful in this space, but successful investing requires knowledge and caution. First things first, if you're new to crypto, leverage is not your friend. Get a good grasp of the market, understand how it moves, and learn how to trade responsibly before you even consider leverage. Second, if you do decide to explore leverage, start small, really small, like an amount you're completely okay with losing. Treat it as an experiment, not a get-rich-quick scheme. And remember, never invest more than you can afford to lose. Third, use stop-loss orders. This tool automatically sells your position when the price drops to a certain level, limiting your potential losses. It's like an emergency brake for your investments. Finally, and this is crucial, do your research. Understand the ins and outs of leverage, the risks involved, and how to manage them. There are tons of resources available online, and it's worth taking the time to educate yourself before you risk your hard-earned money. Chapter 6. Lost Wallet Woes. Let's talk about crypto wallets, the digital vaults that hold your precious crypto assets. You see, unlike traditional banking where you can call up customer service if you lose your password, crypto is decentralized. This means you and you alone are responsible for keeping your assets safe. Think of it like this. Your crypto wallet comes with two keys, a public key and a private key. The public key is like your account number, you can share it to receive crypto. The private key, on the other hand, is like your secret PIN code, giving you access to your funds. Now here's where things get scary. If you lose your private key, you lose access to your crypto. And I'm not talking about just forgetting a password, I'm talking gone, vanished, like it never existed. No customer service to call, no bank to bail you out, nothing. This is why protecting your private key is absolutely paramount. It's the difference between holding on to your crypto fortune and watching it disappear into the digital abyss. I remember reading a story about a guy named Alex who learned this lesson the hard way. Alex was an early adopter of Bitcoin, buying a decent amount back when it was still in its infancy. He stored his Bitcoin on a software wallet on his computer, thinking it was safe and sound. Life went on, and Alex forgot about his Bitcoin for a while. Years later, when Bitcoin started making headlines with its skyrocketing price, Alex remembered his long-forgotten investment. He rushed to his computer, eager to check on his digital fortune, only to realize he had completely forgotten his wallet password. He tried every possible combination he could think of, but nothing worked. His Bitcoin, once worth a few $1,000s, was now worth millions, locked away forever in a digital vault he couldn't access. Alex's story is a stark reminder of the importance of remembering your private keys and storing them securely. Section 3. Safeguarding your crypto tips for wallet security. So, how do you prevent yourself from becoming the next crypto horror story? It's all about taking the right precautions and being proactive about your wallet security. First and foremost, never, and I mean never, share your private key with anyone. Legitimate companies will never ask for it, so if someone is asking, it's a scam. Second, consider using a hardware wallet. These are physical devices specifically designed to store your private keys offline, adding an extra layer of security against hackers and malware. Third, back up your wallet. Most wallets have a recovery phrase, a series of words that allow you to restore your wallet if you lose access to your device. Write this phrase down and store it in a safe place, like a fireproof safe or a safety deposit box. Finally, stay informed about potential security risks. The crypto world is constantly evolving, and new scams and vulnerabilities pop up all the time. Stay up to date on the latest security best practices and be vigilant about protecting your assets. And there you have it, guys, some of the most chilling crypto horror stories that highlight the importance of responsible investing. Remember, while crypto offers incredible opportunities, it's not without its risks. These stories serve as valuable lessons reminding us to approach crypto with a healthy dose of caution and to prioritize security above all else. Always do your research, invest responsibly, and protect your assets like your financial well-being depends on it, because it does. Thanks for watching. We hope these stories have given you valuable insights into the risks of crypto investing. Remember to always do your research and stay safe out there. Don't forget to like, subscribe, and hit the bell icon for more informative content.